Edition of the NBC Markets Morning Call, 3rd of December 2025. Stocks drifted higher overnight on rate cut hopium. Essentially, I think we're below where we were at the end of last week in terms of percentage probability or probability chance of a rate cut. Yet the great washing machine of the news cycle has recycled this news story over and over again for a week and a bit, and largely caused a decent sized rally. So Nasdaq now are probably it's up 2% for the week, but was it's only on a 5-day basis, but probably more like sort of 6% since last Monday and that holiday week. Aussie not doing as well. Neither's the Nikkei. We're still in sort of sell territories on the technicals for the Aussie market, and it is finding it very hard to rally at this stage. It'll be interesting to see what happens in the Nikkei in the course of the coming days with those Japanese bond yields higher. But the technicals for the US are definitely back in that strong buy territory on all these metrics. Despite whatever the catalyst is, as I've been saying over the course of the last few months, when that momentum underpins the move in the market, it's just best not to fight it. So it's where if it was a battle between fundamentals and technicals, particularly in the last sort of 12 months, technicals wins by a landslide. So we will just be keeping an eye just generally on that overall to see if there's any catalyst to turn around. But I mean, in terms of news, there was some weaker manufacturing data. I think until we start to see the data, particularly the PCE on Friday night, this Friday night, which will be our Saturday morning, it's largely irrelevant overall. And I still I get the reason which why we buy tech whenever there's softer economic data, because as far as financial stability goes, I think Nvidia, Apple, Microsoft are a better bet than the US government at this juncture. So and the broader economy. So I think that there is that element of safe haven buying into that Mag 7, and they're not ridiculously expensive. It's just a matter of what's being priced in moving forward. So but as you can see, the broader market and the cyclicals getting pretty hit. There wasn't really any joy outside of the semiconductors and the mega cap names overall. Marvell Technology, which is in the semiconductors, reported after the bell, was up about 13% and doing very well. They announced an M&A deal to buy optical AI startup Celestial AI, and obviously that was very taken very well. Dell Technologies gained, but more so on good vibes. As the Dell family announced a large philanthropic initiative where they're going to give $250 to every kid out of the tax benefit from the big beautiful bill. So it's one of those photograph moments for Trump and Michael Dell, it'll be. I'm sure that'll be used as an excuse for further tax cuts to for the top 1%. But they did a good thing, and they'll be part of the investment accounts that are supposedly going to go to children that were $1,000. So that saves the US government a fair chunk of money, I suppose. So anything to get that debt down. Kevin, obviously, White House economic advisor Kevin Hassett's been widely reported as the Fed chair replacement, a very clear front runner overall. I'll do a bit of a deep dive on him in the coming days. I just thought as we go into the end of the year, just preparing the end of year, the market outlook for 2026 here at MPC. Which was wildly popular last year and was probably one of our most downloaded things. But just having a review of the sectors, it was just really interesting that, banks were by far and away the best performer last year, as was tech, materials and energy the worst. And one of the key predictions, we had last year was that would rebalance. Look, and as you can see there, materials up 22.5%, financials up 3%. Tech down 15%. The big surprise there really was healthcare. We've got IXJ, which is the global healthcare ETF, back at record highs. Australian market, it's been a really dour market this year. We've done the opposite to the US. We've seen the negative in everything. And look, and it doesn't help that obviously CSL's has been hit pretty badly, and that takes up such a massive chunk of our healthcare. But I would have thought that's a relatively decent opportunity over time, because the healthcare names, we've seen improvements in Ramsay, and a bit of a bottoming out of some of the parts of the healthcare sector. Tech again is pretty cheap at the moment. WiseTech and Xero and Block all lingering at fairly low, PEs as a historical average. Energy sector really hasn't made much of a bounce back because look, oil and coal, they're fighting the good fight to the upside, but obviously pretty compressed, just on the back of OPEC supply and drill baby drill, etc. So we've but interesting to see industrials up 11% there as well, which is pretty counterintuitive to that energy being down. I think it's probably just more a reflection of how poorly it did the previous year. But I'll do little bits and pieces to give you a bit of a preview of the 2026 outlook as time over the coming weeks, because we are pretty thin on news moving forward, particularly coming into Christmas. If I hear the word Santa Claus rally one more time, I might puke, but it is what it is overall. But we've got the silver made an impressive fight back last night. Was down about 2.5 to 3% when we closed yesterday in the futures, and actually ended up finishing up 1.14. That's what you call some primo price action. It brought a smile to my face this morning when I woke up. Gold did hit fresh highs, and then just sort of drifted back overall. Copper, platinum, crude, all drifting off anywhere from 0.5% to 1.4%. We had lithium and uranium bounce back, which is probably, and only about 2.5% to 3%. That's sort of reflective of that. They were hot themes that were running with the AI thematic particularly well. So I think that's a pretty good signal of risk. That the market's feeling very risk on at the moment. And Bitcoin's back, babies, up 7 or 8% overnight. For those of you who didn't yet listen to yesterday's or watch SBS News last night, we were calling a buy in Bitcoin, and not just because Jim Cramer said it's a sell, but we're saying that it is at minimum a dollar cost averaging, and it is very likely that Trump, with the 10% plus reportable of his assets, God knows how much he's got hidden somewhere in the Cayman Islands. He's going to be very supportive of the of crypto and Bitcoin overall. He's been a massive supporter of it, and just like around April, 10th or 11th, where we bottomed out, and he put that Truth Social tweet up. I would expect there to be, he'll be able to hit the panic button and send in a rescue team via Truth Social, and get the bid tone back there. So we think it's a pretty decent buying opportunity as nothing's changed. The debt spiral continues in the US, and it's, as I've always said, it's a little bit more of a negative US dollar story than it is necessarily, loving gold, silver, and Bitcoin as stores of value. But yeah, and look, I think copper's been very underrated as well. I would say that on the Australian market today, we've had a decent little run, but in some of these material stocks, but they're still way undervalued. I dare say that the likes of BHP and a lot of these copper and silver miners, like Andean Silver, Broken Hill Mines, who's in production, are significantly undervalued at this point, just on all-in sustaining costs, and then where the headline is, where the underlying is. Sorry, I think we'll probably see some catch up because none of them are broken to fresh highs on this move from the last move up we had in gold, silver, and copper. Or silver and copper in particular, but silver and copper are both higher. So, I would expect that, that dour sentiment that we've, sort of flagged for the Australian market is, we just don't seem to believe anything until it's, it's well and truly underway. So there are advantages in that, obviously, because it creates opportunity to buy the lagging companies, but I would expect that we're going to have some pretty solid earnings from a lot of these companies, the mining companies in the next earnings season around February, because the underlying the Aussie's gone really nowhere. The underlying's gone up significantly. I think there's probably even a chance that BHP potentially ends up making more out of copper than iron ore. Or at least predicts that may be the case because it's up pretty significantly this year, and they've been ramping up production there. So, and iron ore prices really haven't been depressed. I'd tell you what, if iron ore prices head higher, and they've been fairly flat and gone nowhere for basically the entire year, if iron ore prices go higher, BHP and Rio are going to go on an absolute tear. Yeah, so market outlook from last year, roughly 80% success rate. 11 were correct, 2 were up for debate, 1 was wrong. The market outlook will have a webinar attached to it this year, as well as a PDF. It was a pretty chunky PDF last year. I think it was. But it's definitely holiday reading. So if you go to npcmarkets.com.au/webinars, you can register there. You'll get the PDF when we release it, and then you'll have access to the webinar as well, which will be somewhere in mid-July. Obviously we cover a lot of key themes to watch: economic risks. We have a commodities and energy outlooks. Global equities outlook, etc. So it's an actionable report. It's not just economist drivel. We actually apply it to your investing and where the investing opportunities are. Not an IMF report, which is about as valuable as next year's weather. That pretty much wraps it up for today. I dare say we'll have, the SPI was up about 0.2%. We got WiseTech today with an investor meeting. We've got GDP today at expected up 0.7 quarter on quarter. I would imagine there won't be any reaction unless it's strong. Just on the fact that if it's weaker, it means that rate cuts may still be in play. If it's 1% or more, then it's game over for rate cuts. So that'll affect the rate sensitive end of the market. So we are expecting exports to detract slightly from the GDP, and it mainly be domestic demand based. But that comes out around about 11:30. But have a great day, everyone, and we will speak again tomorrow.